Hi, my name is Patrick White. I'm on the Stockbridge Selectboard, 9 months left in my term, and I wanted to talk to you a little bit about budgets. I'm going to create a series of very short videos, talk to you about how budgets work for a town, what some of the pressures we face in Stockbridge, what some of our options are to address those challenges, and what some of my opinions are on what action we should take. So let's start with the budget overall. I'm the chief financial officer of a Stockbridge nonprofit. I do budgets for a living. So let me just frame first to explain how the budget works. The town budget it's very similar actually to a household budget, a company's budget, or a town's budget. You make a certain amount of money, you spend a certain amount of money. Goal is to not spend more than you make. Sometimes you borrow money to do things like buy a house or build a sewer. And then you got to pay for those things over time, 10 years, 20 years, 30 years, whatever the term of the borrowing is. In Stockbridge, almost all of our revenue comes from property taxes. So I believe it's something like $9 million or so out of $11 million. Now the rest of the budget comes from other types of taxes, personal property taxes or occupancy taxes, meals taxes in a restaurant. This basket of taxes is what we use to not only pay for the operating budget, which is police and fire and town employees and keeping the roads plowed, et cetera, et cetera. It also pays for debt service. So we borrow to build a new town hall or to repair the sewer, repair bridges, replace bridges. That kind of borrowing all gets paid for over time out of the operating budget. Towns also have expenses. So expenses are basically things like payroll, things like debt service. Those are basically the two main ones, but you also have a whole bunch of operating expenses, the cost of running the IT, the cost of doing any one of a number of things. All that rolls up in the budget. So you've got your operating expenses, you've got your debt service, and you've got on the revenue side, you've got taxes around staying at a local hotel, or meals taxes or property taxes. All those together give us a budget. Now, the budget is a really important aspect of how it relates to the taxes you pay. And here's why. The budget is a prediction of what the town will take in and what will spend. So, the more conservative that prediction, the more revenue you need to raise in order to make the budget. Now, Stockbridge has, in the past several years, done a very good job, some might think too good a job, at budgeting conservatively. What that means is that at the end of the year, how much off were we? Now, you don't want to budget too low, because then all of a sudden you have to go into reserve funds or your stabilization fund to make up the difference. Same token, you don't want to budget too high, because if you do so, you basically are collecting more taxpayer money than you need to. Because the way taxes work in a town is that every other tax that we predict, sort of like occupancy tax or meals tax, all those predictors, whatever's left over, sets the tax rate on property taxes. So lately, we've been taking about $1 million in a year in free cash, and to me that's too high. On an $11 million budget, we're basically charging almost 10% too much. If we look at what the actual expenses have been versus what the budget expenses have been. Now, there's a lot of ways why that happens. One is that, when we do the budget, it's for the next year, and as properties sell and sell for a higher price, then the assessments go up based on the sale price, and that generates some of the free cash. But you also have very conservative approaches to things like the occupancy meals tax. Now, initially last year, we were thinking about trying to peg that around $400,000, and I argued argue that we should actually probably get around 600,000, and that was still too conservative because on our running rate right now, the occupancy tax and meals tax looks like it's going to come in around $800,000. Sorry, my dog is barking. All right. Every time we under budget for something, it adds to the free cash. So what you end up with is, in the case of Stockbridge in the past several years, we've had we've under predicted what the revenues would be, and we've over predicted what the expenses would be, and sometimes we've even done that in a funny way. For example, we set up a reserve fund, if you will. We put special money in during COVID to take into account what might happen to occupancy and meals tax. But then we also lowered that in the actual budget. So in effect, we basically budgeted for it twice. Now, I'm going to propose a number of specific amounts this year to keep our free cash at around $200,000, which represents about 2% of the budget. We've got millions of dollars in stabilization reserve already because of the fact that we've been running these surpluses. All right, let's try to take that down from about $1 million to about $200,000. That $800,000 represents about 7% of the total budget, and that means if your tax bill is $5,000, saving 7% just through tighter budgeting will result in, I don't know, you saving $300 or $400. And to a lot of people in this town, that's real money. So, as we think about budgets, we want to think about income, expenses, borrowing, and paying off that borrowing over time. And that's a basic overview of how a town budget works. And that's the first video.